Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey, and this week I have a special guest, Asif Suria, who is an entrepreneur, an investor. He follows the insiders, and that's why I'm having him on this week as my very first outside guest on the Market Edge podcast, because he has a new book out that's very intriguing, and you should check it out. It's on Amazon, but it's called The Event-Driven Edge in Investing: 6 Special Situation Strategies to Outperform the Market. Here it is, holding it up. If you are listening, you can't see it, but the book is on the screen. So be sure to try to get the podcast as a video format on YouTube. Go to Zacks.com/YouTube to find this video podcast and subscribe so you don't miss a single one on the videos. But we'll do our best to be fine on the audio for today's podcast as well. So welcome, Asif.
Thank you for having me on, Tracey. You and I have been connecting with each other for a while on Twitter, and it's actually good to see you, even though it's virtually, through this podcast.
Yeah. Yes, we've been Twitter friends for quite some time, mostly because of both of our interests in insider trading. But this book does cover more than that. So I took a bunch of notes. See, I was like reading it all, writing down all my notes. But I did want to cover what else, even though we're mainly going to talk about the insider chapter today. It does cover merger arbitrage, SPACs, management changes, spin-offs, stock buybacks. And I do recommend, for those of you who get the book, pay particular attention in the stock buyback chapter, because one of the things that made me the most enraged over the last 5 years is actually featured in there. Asif, I never mentioned this to you, but I was following the Bed Bath & Beyond saga for many years. And in the insider, some insiders had bought there over the years. So we owned it off and on in the insider trader here at Zacks. And then I was paying attention to like what they were doing, the number of, they had a dividend and they were buying back shares. And it's all laid out in your book, but check that out for anybody who gets the book. That's very illuminating on what can go wrong with corporate buyback programs and what to look out for that might put up a red flag as well. But let's cover the insider trading. So why did you include this in a book about event investing?
And that's a good question, Tracey, because when people think about special situations investing or event-driven investing, they don't normally think of insiders. They think of, merger arbitrage. They think of spin-offs. Those are the classic special situations, liquidations and things like that. But I've been fascinated with, insider transactions almost as long as you have. I started doing this in 2010. So I have data about going back about 14 years. I've been looking at it almost every single night. I look at the Form 4 filings. And I just find it to be completely fascinating. So if you think about special situations, and that is a signal when a corporate action occurs, like a spin-off or maybe 2 companies are merging. I view insider transactions the same way. It's a signal from the management team letting you know that at least they think the stock is undervalued. It's not always the case. And as I mentioned in that chapter in the book, Soros's theory of reflexivity kicks in, where the insiders know that you and I are looking at their actions, and investors are paying attention to what they're doing. So every once in a while, instead of just buying stock because they think it is undervalued, they actually end up buying because they're trying to signal the market. So that's why I felt like it had its place in this book. And I'm glad I decided to add the chapter on insider transactions.
Yeah. It definitely puts up a very interesting signal. And I do think it takes like a certain personality, which you and I both apparently have, to be like very intrigued about who buys when and why. What are the strongest signals? What are, you call them, low signals? But let's start off with a basics for people who are new to this concept, and you cover this in the book. But what who is an insider? Like, what is that person? Obviously, I know it might be the CEO, the CFO, maybe, but who else is an insider?
Yeah, anybody on the management team that is at the position of vice president and above is an insider as far as the SEC is concerned. And so, as soon as they buy or sell stock or exercise options, within 2 days they have to file a Form 4 with the SEC. 10% owners of the company are also considered insiders. So are directors. So, anybody on the board of directors is considered an insider.
Okay, that's good to know. I think some people on management might want to know that it can include people like vice presidents. I've seen like the head of marketing, head of engineering, head of planning. It could be quite a number of people, including head of HR, the general counsel, and and on, depending on what their titles are like. Also, I've seen a lot of chief accounting officers separate from the CFO. They may be in there. Chief technology officer, sometimes chief operating officer, the COO will be in there. Just so they know if they're looking down the list, what kind of to look for. But you just laid it out. They have to file these forms. So you can go on the SEC website yourself, and you outline this in the book. Like, it's very well discussed in the book. So I recommend people to check that out when they're reading this chapter about where to go on the SEC website to find the insider transactions and how to read the page, the F4 form when you get there and what it all means. But I have a question about the F4. So you talk in there about like the footnotes that you can sometimes find, as you and I both know, on these forms. Has there ever been a footnote that has really stood out to you? Or you think is kind of like, wow, I can't believe they told us this, or that's kind of crazy, or have you seen anything weird in a footnote?
Oh, all the time. You start seeing
Okay.
strange things in the footnotes. You absolutely have to read the footnotes to understand what's going on. Here's an example. You might find that sometimes the insiders both buying and selling the same stock at the same time at the same price, which usually doesn't make any sense. Why would you buy and sell at the same time? And that might just be a situation where they're selling from a direct account and then moving it into a trust. So they might just be moving it from one account to another. So a footnote would clarify something like that. There was this multi-million-dollar purchase by the CEO of Pinterest a while ago, and that was interesting. He had just joined Pinterest as the CEO, and then I noticed this purchase. And I went and looked at the footnotes, and it clearly said that if he made this purchase, and I don't recollect the exact amount, I think it might have been $5 million. If he made this $5 million purchase, the company would then give him an additional $5 million. So he was very upfront about the fact that he wasn't just buying it because he felt it was undervalued, but because the company had this stipulation in his employment contract where he would get an additional $5 million if he did this. So having read that footnote a few years after that, when I noticed that the CEO of Workday ended up buying stock on the open market, I had the feeling that maybe this is a similar situation. It was a new CEO who had just joined, and I looked at the footnotes, and there was nothing in the footnotes. So I pulled up his employment agreement, and surely in page 3 or 4 of the employment agreement, it stipulated that if he bought stock on the open market, then he would get an equivalent amount from the company. So sometimes you have to look at the footnote. Sometimes you have to think, is there a footnote that's missing here that should have been here? And maybe I need to go dig deeper to understand why he is buying.
Yeah, you do have to be kind of a detective sometimes on a lot of these and ask yourself why. Like, why is this purchase being made? Why this amount? So let's talk about just some more particulars that you lay out in the book. So the stronger signals that you tend to look for. I wrote these down. So you look for directors buying, especially if they're investment professionals. Why is that a good signal to look at?
Yeah, so in an ideal world, you would think every insider is buying just because they think the stock is undervalued or because they expect business to improve in the future. Maybe it's a cyclical industry and they see that demand is starting to outstrip supply, or maybe they know that there's a huge contract coming in the next 6 months or the next year, and they're buying in advance of that. But often, as we just talked about earlier, they buy to signal the market. This is not an incentive for an independent director. The independent director doesn't necessarily need to signal the market that the stock is likely to go up. That's something that the management team might do. So I like independent directors who come in with an opportunistic purchase. So this is not a director that's constantly buying stock, comes in once every few years or maybe once in a 10-year period to buy the stock. And if they are an investment professional, that means they understand how to value the company. They understand what's happening with the sector. They understand the macro environment. So I like that combination of looking for independent directors with an investment background who've been on the board of directors for a long time.
Yeah. I too like to look at the directors and think that that's a really strong signal. And also because a lot of the directors tend to be on other boards as well. Not always, but many times they sit on more than one. And why are they buying this one, but not some of the others? Or if it's a director who's not an investment professional, but who is a CEO of like another company, again, why are they buying this other one they're not even a CEO of versus their own? That's where the digging around starts to get interesting, and you do start to wonder about like motivations and things like that. So the directors, I've had a lot of luck when it's just been like a single director diving in, either if the stock is at like new multi-year lows, but even when it's at multi-year highs. What do you think about it when the insider is buying on the highs and not the lows?
I actually like it a lot. It means that the strength in the stock has not discouraged them. They see things continuing to do better in the future. We saw this actually as recently as last week, where an independent director of Heiko, the company that makes aircraft parts in the aftermarket, he purchased stock, and the stock is already up maybe almost 70-80% this year, and he's still willing to buy. So I like the fact that they're buying when the momentum is in the right direction, if you will. Um, there is obviously some risk of a pullback, but if it's an independent director who's been there for a while, hopefully they understand that things are going to go well over the next year or two, which is worth pointing out. Some of these insiders are like value investors. They're early to buying stock, and they're looking out really, 6 months to a year out, maybe 2 years out. And people in the market who follow them sometimes get discouraged because they buy the stock thinking this insider's buying and nothing happens for the next few months. You just have to keep in mind that these folks are looking at things with a very long-term time horizon.
Yeah, that's a good point. Most people forget about that these insiders are not actually trading the stock. They're not buying and selling for the most part. They do buy for the longer hold because they really have to hold it for at least 6 months. So yeah, some things may not, if it's a turnaround type of situation in a company, it may not be happening in the next few weeks after they buy the stock. And also another thing to point out is that the insiders can't just buy whenever they feel like it. Like people forget that too. And I've just, having been a lawyer on behalf of some of these companies and then now running the insider trader, there is definitely periods where compliance departments inside these companies will open the window, is what I call it, and literally tell everybody, even the regular, lower level employees, you can buy or sell our stock on this day. And a lot of the bigger companies that are doing a lot of mergers or acquisitions or something else is going on have a lot of restrictions on. Smaller companies tend to have less, but that doesn't mean there's not certain periods where they cannot buy. As you mentioned in the book, there are these quiet periods where usually ahead of earnings reports, you can't be buying. That makes sense, right? Like I'm not going to be buying or selling JP Morgan Chase when they report in 2 weeks and have all the information about what happened last quarter sitting in front of them. Like that is not allowed unless on a caveat, unless it's on a 10B5-1 plan, which you mentioned in the book. And I've mentioned many times as well, especially on Twitter, because people don't really understand what it is. But that's a plan an insider can set up with the SEC that allows them to buy on a certain schedule or sell on a certain schedule. Regardless of what's going on at the company. And you see those plans usually set up by big shareholders, like a Mark Zuckerberg has one, Bill Gates had one for years, Jeff Bezos, like a lot of the people like that have them set up because they're selling sometimes every month. They sell their shares because they have so many. Sometimes they sell like every quarter. Sometimes they just decide to set it up and do it only for a year and then they're done with their sales. But sometimes they do it for buys as well. But I don't know if you've noticed, but I don't think it's as common with the buying as it is with the selling. But if you don't have a 10B5-1 plan, you have to really follow what your compliance department is telling you. And for some of these really big companies like a Mag 7, you may only be able to buy and sell on one day in the quarter. And it's usually after the earnings report comes out. So, or some other big kind of announcement. So keep that in mind for everyone out there wondering why, if a stock is hitting 5-year lows, why aren't the insiders all diving in to get it at those lows? And it could be that I call it a lockdown or a quiet period, but they're on lockdown. They can't buy it at certain points. So keep that in mind. Okay. Another area you like when they buy is the chairman of the board. And you said, especially if they're in like a cyclical business like copper, I'm presuming like oil would probably be in there. Why do you like it when the chairman is buying on the open market?
Yeah, so as you mentioned, I have a couple of case studies in the book. So every chapter has 2 case studies, one where things worked out very well and one where using the strategy did not work out well. And so a chairman of a company, if they've been on the board and have been the chairman for a long period of time, usually decades, especially with a cyclical company like copper or oil, they understand the different cycles. They understand, we are in a part of the cycle where supply has exceeded demand and, things are going down, or that we are at an inflection point, that, supply is getting constrained and demand is increasing. And, quite likely earnings are going to start increasing quite significantly over the next few weeks of next few quarters, if you will. And so when I see somebody like that step in, Southern Copper had Mota Velasco, who was buying several years ago. You had Harold Hamm of Continental Resources that was buying this oil company stock. He was one of the few that went so far as to issue a press release saying that I think the stock is significantly undervalued. That's why I'm buying. Usually I see that as a red flag, but this was an exception where he was buying in April, May of 2020, and that was a time when you saw WTI oil futures dip into negative territory, and a lot of insiders stepped in and started buying. So when I see somebody who understands the industry, has been in the industry for a long time, and is buying, that really captures my imagination, if you will. I'm seeing it right now with Jack Hightower, who's I think he's been in the oil and gas industry for 48 years. And he's buying stock right now in, I believe it's called High Peak Energy. So, when I see something like
what's
that.
the name?
I believe it is High Peak Energy.
High Peak.
Yeah.
Okay. We'll check out on that one, right? Everybody's gonna. Yeah, these longtime guys who've been, like you said, 48 years he's been there.
48 years he has had experience in the oil and gas industry. The company isn't that old. So, somebody with that level of experience in the industry wanting to buy stock in his oil and gas company is certainly fascinating to me.
Yeah. Are they Canadian? High Peak Royalties? Is that who it is?
No, they are based out of Texas. So High
they
Peak
are.
Energy, HPK is the symbol.
Oh, HEK?
HPK.
PK. Oh, there we go. For some reason, Yahoo Finance was not bringing it up. HPK. Yeah, I'm going to keep an eye on that. I do think, as you said, these ones, people who have been in the industry that long, obviously it's their life and they are experts in it. And when those people start buying, that is when I also tend to notice. But that makes sense. So we'll keep an eye on the chairman of the board, including at High Peak. And then another area you like to look at are the founders or the CEO who is buying. Why a founder?
Yeah, so with the founder, it's their baby. They created the company. They saw it through the initial growth. They probably raised a bunch of rounds of funding, whether it was from venture capital, private equity, and they took it through IPO. So, they've seen the entire process, right from the inception all the way to managing it as a public company. Each stage of the company's growth brings its own challenges. And so, if it's somebody who's gone through all of that, and has done well, they really understand not just the company, but the industry in some sense as a whole. They understand how the company's positioned compared to competitors, compared to the industry. You have the big names like Bill Gates, you have Mark Zuckerberg. There was also Joe Kiani at Massimo. I remember almost 12 years ago looking at his insider purchases, and he was spot on as well. You had the CEO of United Therapeutics buying. This must have been, again, 10 to 15 years ago. So when I see these founders, CEOs start to buy stock after, maybe a big pullback in the company, and the company is doing well, the founder has been known to execute well, that really captures my attention.
Yeah, for sure. Okay, let's move on to the signals you don't like. So you have the low signals and you don't like to buy these, and that's insiders buying in a group on the same day, usually for low amounts. Sometimes these are into like retirement accounts even. It'll show on the form F4, it'll say like 401k in the column. What I've noticed this too, and I also think it's a low signal, as you call it. But what's so bad about it when you see a bunch of them all buying on the same day?
Yeah, so as you mentioned, it could be one of three reasons. The first reason, as you mentioned, is maybe it's an automatic purchase into their 401k, or it's a employee stock purchase plan, ESPP plan, where it's an automatic purchase by the company for them. The second thing could be that it's a dividend reinvestment. So if they set up a DRIP plan, any dividends paid by the company would essentially end up triggering a purchase of the stock, and they have to file a form for that dividend reinvestment. So again, it's an automatic thing. They're not thinking about whether the stock is undervalued. And the third reason is when companies do a secondary offering to raise additional capital, you'll often find that the insiders participate in the secondary offering just because they want to signal that they have confidence in the company, and that's why they're participating. Elon Musk did this with Tesla all the time. When every time they had a secondary offering, he would participate in it, and a lot of people would think he's just buying stock on the open market, and that wasn't the case. So when I see clusters of insiders buying at roughly the same price on the same day, I know that it's time to go look at the footnotes to understand why that is happening. The other reason it might happen is, there might be a coordinated effort by the management team to signal to the market that they think the stock is undervalued because there was an earnings miss and the stock dropped quite a bit. So while I like cluster purchases and multiple insiders buying, if I see them all buying within a day or two of each other, either it's an automated purchase or they're trying to signal the market.
Okay. Yeah, that's definitely something to keep in mind. That's why you have to actually look at each of the individual purchases and kind of gauge what's going on there. But you usually can tell when you're on the SEC website, because there'll be, a whole bunch of filings all on the same day. And then when you start looking at them, it'll say, each director was buying like 100 shares, or, sometimes I've even seen 25 shares or something, depending on how much the stock was, the price of the stock. And they're each buying it on that same day. And then you realize like, oh, this is some kind of compensation. Like they're all getting it at the same time and all buying the same amount. And yeah, those, I always just disregard those signals as well. Okay, so let's talk about some actual examples because you give some in your book. I have a couple that I've had from all my years of running the Insider Trader. This is where it gets really interesting to me. So the first one I feel we should talk about was in your book, and it's on Vertex. And you talk about how there was an independent director on the board for a long time. That director went out and bought a big amount of shares in November of 2020 for $3.26 million. And then you talk about how his last purchase had been in 2008, which is a lot of years to wait in between buying on the open market there. And he had been on the board for 22 years. So all these things are like sending up like the bat signal to you, like, it's like going off. So why did you start digging deeper on this one? And what did you learn from just seeing what he did there?
Sure. So in some sense, I got lucky with Vertex. All the signals were there, but as you know, Tracy, there are hundreds of these Form 4 filings filed every day, and there's only so much time we have to kind of dig in, read the footnotes, and then try to understand when did this insider last buy stock, so on and so forth. So I publish an article called Insider Weekends every Sunday, and I sent one of these out, and a subscriber of mine who was reading it responded back to me and said, "Hey, this is two briefcase Bruce that's buying the stock, and if two briefcase Bruce is buying, then I'm going to buy the stock." And I didn't know what he was talking about, so I reached out to him and I said, "Hey, what does this mean? Who's two briefcase Bruce?" So he told me about how in the early 1990s, he used to work with Bruce Zacks at a company. And Bruce Zacks' work ethic was so good, so renowned, that he would take these two briefcases worth of work back home with him every weekend before people used to take laptops or computers home. And he would come back on Monday with those briefcases worth of work done, and he would dive right in again. So he was known for being this person who was very detail oriented, who was very hardworking, and obviously very smart. And so he mentioned that if he's buying stock of Vertex, something is going on. So that made me take a look at who Bruce Zacks was, when did he last buy stock. And that's when I realized he hadn't bought stock in more than 10 years while he had served on the board of the company. And so I looked at the company, and it was a biotech company, which is an industry I normally avoid because I don't have a PhD in any related field that will help me understand what's happening with the potential pipeline of drugs. But when I looked at this company, just like United Therapeutics, it made sense just on the financials. The company was revenue was growing very rapidly. They had a good balance sheet, and they had this cystic fibrosis franchise that was doing very well for them. They also are working on new drugs to treat sickle cell disease. So I looked at the story. It made sense looking at the company's financial statements. It made sense in terms of the independent director buying stock. And then a few months later, the CEO also bought stock. And that was the secondary signal I received. So the independent director and the CEO were buying stock. So I ended up buying it for myself. I wrote about it. And the stock has more than doubled since his insider purchase. As I often see with some of these scenarios, the insider doesn't necessarily sometimes stick around for the whole journey, if you will. He did end up selling somewhere along the way, but that worked out as a great idea and a great investment for me.
Yeah. So I put up the chart for Vertex, the 5-year chart. I just compared it to the S&P 500, but November of 2020 was in here. So it looks like Vertex is in the blue. It looks like the shares had plunged down. And so he must have seen this as a buying opportunity right there on that plunge. And then it did get a nice little rally into 2021, sold off there, but then has taken off, as you can see, and is well outperforming the S&P 500 over the 5-year period, which is a little bit after or before he ended up buying. But yeah, it's always interesting to see kind of when they're buying and why. And this was a big one, but you had to be patient here because you had this big sell-off for almost a year.
Exactly.
here.
And so the secondary signal of the CEO buying a few months later after the stock had dropped even more proved to be a good signal. I personally still hold it in my portfolio after all these years, and the company continues to execute, although the upside opportunity might not be as good now as it was back then.
Yeah, I too look a lot at when was the last time this insider has bought? Why have they waited, sometimes over a decade as this insider did to buy again, especially if they've been around the company that entire time. And now that we're number of years removed from the pandemic, I find myself asking, if I look back at their history, because you can on the SEC's website, you can see all of their buys and sells going back years. And if you go back even just to the pandemic, where you talk about this in the book about the number of insiders who were buying during the early period of the pandemic, then why weren't they? Because a lot of times I'm finding people are buying now in 2024, but I go all the way back to 2019 and they hadn't purchased at all, not even during the dark times of the pandemic. Now, it could be that they were somehow excluded from buying during that time period, depending on what kind of industry they were in. And some other things I've noticed about the pandemic buying is that a lot were doing it initially, like in March, as the big sell off was happening, as the lockdowns were just hitting. But by like May, when there was a lot more stress in the economy and just in the global society in general, with illness and death and things going on that were not good, that a lot of the insiders were not willing to buy at that point, which makes some sense. I've talked about like the psychology of some insider buying, that if, it's very difficult for an insider to buy their stock if they've just done big layoffs, for instance. Like that's a little cold, right? Like, hey, we just laid off, 30% and I'm buying the stock now with all my money. So that they usually, for like PR reasons, tend to stay on the sidelines. But that didn't happen until months after the pandemic started. But when I go back and look and find that they didn't buy at all, since 2019 until right now, I feel like that sends up like a pretty strong signal too, that something else good is going on there, that they didn't even bother to buy when it was, really in the doghouse during the pandemic. So, what do you think about that?
I think that's a very important point. If they weren't buying then, it's strange that they're buying now. But I'm glad you brought up the pandemic-related buying. Those 2 or 3 weeks, mid to late March of 2020, that was the first time I'd ever seen insider buying in any given week exceed insider selling. So we track something called the sell-buy ratio, and for the most part, you'll find that insiders sell, 30 times as much as they buy in any given week. 30 to 35 times. It was during those 2 weeks during the pandemic where, for the first time ever, I saw selling go down quite significantly and buying go up so much that insiders as a group were buying more than they were selling. So that was a very strong signal for me back then. And then I've seen it with the sector specific signals. So when WTI crude futures went negative in May 2020, the oil company insiders were buying. When we had the Silicon Valley bank crisis last year, you could see the bank insiders were buying hand over fist. We were getting tired looking at all the bank form polls. We're like, how many of these guys are going to buy? But while I was thinking that there was a second shoe to drop, they were not waiting for that. They were coming in there and buying because they had confidence in their own banks. So I love the sector specific buying at a time of distress.
Yeah, it's always a good sign if there's a crisis in a sector, but the insiders are still buying at the places that aren't in the crisis. That does tell you a lot about what's going on. Yeah. Okay, let's talk about another example, but I don't think this one was in the book, but you were telling me that there's some kind of insider buying going on at Zillow.
Yeah. So I have a case study in the book about Netflix where there was an independent board member on Netflix whose name is Jay Hogue. And he purchased the stock of Netflix a long time ago when Netflix had decided to split itself into two different companies. They were going to do a DVD rental company, and they were going to do a streaming Netflix movie service company. The DVD rental company was going to be called Quickster or something like that. It was a terrible plan. The market did not like it at all, and the stock dropped very significantly. And at that point, I remember somebody called Jay Hogue, an independent director, stepping in and buying stock of Netflix. And his timing was exactly right. He purchased pretty much near the bottom. The stock went on to do extremely well after that. He did the same thing with Zillow several years later when Zillow was down a lot. He ended up buying. Again, he had served on the board of Zillow for I think well over a decade before he bought. So Jay Hogue is somebody I've always paid attention to. As I mentioned, he's also part of a case study in the book. So about the book came out in May. I finished writing it early last year. But about 3 months ago, I noticed that Jay Hogue was once again buying stock of Zillow. And this purchase did not make any sense to me. So this is about 3.5 months ago. Because you had the situation where the National Association of Realtors had that lawsuit settlement, which meant that realtors were going to be under pressure in terms of their commissions that they get for helping somebody buy a home. And if Zillow's key customer base are realtors, then you would think that that settlement would have an impact on them as well. You also had the situation where interest rates were very high. The Fed had not yet signaled that they were going to cut rates. So overall, when you looked at the macro environment, it wasn't the best place for Zillow to be. Yet he was buying stock on the open market. And not only was he buying stock on the open market, Zillow has two classes of shares. They have Class C shares and they have Class A shares. Class A shares are the voting shares, and the Class C shares don't have any votes. He didn't wait to buy Class A shares because volume is low. It would have taken him some time to buy up the stock. He just went out there and bought Class C shares, which don't have any voting power. So he did that, and it made no sense to me. But because it was Jay Hogue, maybe I should have followed him into it. And sure enough, a few months later, they announced that Rich Barton, the founder CEO, was stepping down, and they hired a new CEO. And just that announcement helped the stock go up a lot because people were enthusiastic about the new CEO coming in, and then you had the Fed cutting rates, starting to cut rates. So that combination has seen the stock go up quite significantly since Jay Hogue's purchase, I believe in mid-June or mid-July.
Yeah, I put up the 3-month chart and you can see it's a 3-month return is up almost 42% right now. And the S&P 500 is up about 4% during that time period. But yeah, quite a move on these shares. And it has been quite a move ever since, the pandemic. The shares came crashing down, and now we'll see with the new CEO in there. But yeah, it pays to know some of these insiders and what their motivations might be and what they've done in the past, as you were just recounting, because you've been following long enough to know, oh, he's done this in the past with great results. That doesn't necessarily mean the next time will be as well, but you do get to kind of know these insiders and how they work, how they think. So that's great knowledge to have. In addition to just when he was buying and, just his background is what gives you the edge there on Zillow. That's ticker Z, by the way. Okay, so I want to talk about a few that I've stumbled across that have been also equally as interesting. And all of these are from this year, actually. And the first one was Super Microcomputer, ticker SMCI. So I got a signal in February. I got a signal in February that a director had been buying in there. So these shares were already up quite a bit by February of 2024 off of the AI revolution because they're in partnership with NVIDIA. So I love it when the directors buy. I took a look and I always look at the back history. Is he just buying now? The shares have already spiked dramatically over the last year. Why is he getting in on the highs? At the time, it was the highs. And So then I discovered that possibly he was one of the best insider investors of all time, or at least he should be on the list, because I started looking back at all of his prior buys, and it turns out he had been buying 9 other times, and no, 8 other times, including the one that gave me the signal. So 9 total times, starting in November of 2022, well before NVIDIA started coming out with its, super hot, strong earnings and sales. He was already buying. So his first purchase was on November 4th of 2022 at $76. And then he just kept buying. He bought on November 14th, November 15th, November 21st, all as the shares kept going up. Then he waited a bit, and then he bought in 2023 on February 3rd with slightly higher share price. He had bought at 83.50 in November, and then he bought at 85.48 in February. Then he waited a little bit, but bought again in May. And now May 2023, people, if you remember, was when he, or that was after NVIDIA had come out and said, we're in this thing and we're getting all these orders and revenue is, surging. And Supermicro, one of the partners, started to see its revenue surging too in its earnings reports. So May, he bought again at 133.08. The next day, he bought again at 133.88. He bought in August at 269.20 and 261.86. And then he waited a little bit until February, and then he bought again at 568. So that seemed pretty nuts. I've never seen any insider buy that many times while the stock was surging, doubling, tripling, quadrupling, going higher. And meanwhile, their sales and earnings are kind of doing that too. So we bought in the insider trader. And then stock was in this crazy period. I'm putting up the chart here where it was just, surging. And then, I see. I'm like, why isn't it at $800 here? Because it's split now. I forgot it was splitting today. So we've got a stock split in Supermicro. So this chart looks a little off, but you can see where it's surging. So February, he's buying as it's surging in here. And then we were selling it almost right away. We sold several times in February, and then we got out completely in March, on March 11th. And then I didn't realize until I was getting ready for this podcast that this director actually resigned on March 11th, 2024, to go work in his family business. He had been on the audit committee. They did put out a press release when he left. They didn't say it was, anything else related to anything. He was just moving on to do other things. So I'm not sure what he's doing with all of his shares since he's not technically an insider now. But we got out the same day he got out, and our final gain was almost 60% in just a little over a month there. So that was a crazy signal that this director was sending, just the amount of belief he had and the desire to continue to buy with his own money as many shares as he could, basically over that 18-month period. I've never seen anything like it. Have you ever seen anything like this with that many buys by an insider?
No, I haven't. Especially as you were mentioning, his purchases, even as the stock price kept appreciating, was quite surprising.
Yeah.
So as you were mentioning, Tracy, here is his insider purchase on February 1st, and the stock went up quite a bit. Here's the split that we were talking about. So as I was looking at you look at the financials, they continue to do well. There's some issues related to them not filing a certain, I think it's either 10K or a 10Q. So there is some concern in the market about what's happening, but they've just done phenomenally well, both on the revenue and on the earnings side of things over the last several years. So as I looked at the insider transactions, What is fascinating was there were a lot of insiders that were selling, but he was the only one that was buying. And this was his February purchase that you were talking about.
Yeah. Yeah. Sometimes that happens where, you just get the one guy or woman who is out there believing and just wants more and more shares. And that's sometimes all it takes. But I do think, when a stock does what Supermicro has done in a short period of time, I'm not surprised to see the amount of selling in there either, because we were only in it in the insider trader for like 4 or 5 weeks. And we even sold within like a week or so of first part of what we had already bought because it was just so red hot. And so Supermicro has been around a long time, and I'm sure there's some insiders who have worked there quite a long period. And so this kind of stock surge could be life changing for a lot of them as well. So I'm not surprised that there would be a lot of sales in there.
And looking at his history of purchases, which is why I wanted to share my screen, was that he started buying, at $76 a share, 1,000 shares, but the amounts he started putting to work kept increasing, even as the stock price kept going up. So his last purchase was actually his largest purchase. He put in $1.14 million into that purchase compared to his earlier purchases being much smaller. So that was fascinating to see as well.
Yeah, that's very unusual. You normally don't see, and also even just the amounts. It's obviously some directors most of them are wealthy, but to see like millions of dollars coming from a director into an insider buy, that's not as normal as you usually see. But yeah, so SMCI was crazy, and I won't ever forget that insider buy. But as you mentioned, they have not filed some of their SEC filings, and according to the Wall Street Journal, the DOJ is doing some kind of investigation of what's going on there. So, but a couple others that I've encountered this year have been kind of interesting. So we own, and we still own, RH, which is formerly known as Restoration Hardware. It's now RH, ticker RH. And that's because the CEO, Gary Friedman, bought $10 million worth on June 26th of this year. And I followed RH for many years because I initially saw some of Gary's insider buying back in 2016 when he bought $1 million in July of 2016 at the price of just $27.59. That was like near the multi-year lows for the stock at the time. RH was struggling a bit. I think they just launched like one of their collections, Modern or something. It wasn't going well. The stock surged down. This is the type of buy you see sometimes from insiders where the CEO will buy to express confidence, as we've been talking about. And that one in 2016 was definitely a confidence buy because the stock was down low. And he was and Gary makes no mince of saying like, I'm buying this because I believe. And that was among one of the best insider buys I've ever seen as well, because through September 30th, 2024, that purchase by Gary Friedman is up 985% off of those lows. And if he had sold out at the highs, which was in August of 2021, as you can see on the chart you're putting up there, he would have been up over 2,000% there. So it was wise to follow him in 2016. So that's why we followed him in here in 2024. And it's been a little rocky at first because it has been a couple months, but they just reported earnings. It looks like it's turning around, and the stock has had a boost off of the recent earnings. So will Gary be as lucky this time as he was on his first purchase? And the other interesting thing about his purchases he purchased in 2016, but he did keep buying in 2017. He bought all the way up like near $100, several other purchases, and then he stopped. He's also one of the CEOs that's quite open about buying the shares and why he's doing it, and also when he sells. He has sold over the years for various personal purchases. Like he once put in the notes that he sold to buy a house in Aspen. So that, he didn't want it out there like I'm selling shares, I'm scared or something, but he just wanted people to know I'm only selling because I'm using the money to buy this other thing. So that's also something to keep in mind when you're looking at at the sales even. People sell for all bunch of different reasons and they don't always tell us. In fact, most times they don't tell us, but I've seen a mixture of reasons put in the notes sometimes. And it's not always what you think. Some insiders literally might sell to buy that vacation home like Gary did, or to, fund a child's wedding, to pay for college. There's all these reasons why someone might be selling that have nothing to do with the company. So keep that in mind. But are you putting up are all these his buys there?
Yeah, so I was
Buys
just
and
looking.
sales.
Yeah, so I was just looking at over a 1 year period, he's done very well. Just from his recent purchase, it's been up 56% or 55%. And then over, as you mentioned, when you look at a longer period, he didn't buy when the stock spiked all the way up during the pandemic-related rally, but he was buying in 2016. It's up at 1,200% since then. 1,100, and then he kept buying in 2017, 2018, and then stopped buying until the recent purchase.
Yeah, he is also a 10% shareholder. So he doesn't really need to buy more shares either. So that is why he's kind of making a statement when he does buy.
So he's like Jay Hogue in some sense. I should pay attention to more of what he does.
Right. You should. Yeah. He's one of those. Okay. And then a final example I wanted to share that I also do currently own as well in the Insider Trader is Yum China, ticker YUMC. So many who follow me know I'm a reluctant investor ever in anything with China. I've been burned over the years, so I tend to stay away. But with Yum China, this was a cluster purchase, a cluster buy with 5 insiders buying. And I just couldn't say no to it when they were buying near 5-year lows. And why so many of them? Those are always really strong signals. So even year to date, when I got in August, the shares were down almost 20% year to date, near the 5-year lows. And the 5 insiders were the general manager of Pizza Hut, the general manager of KFC, the CEO, the CTO, and 1 director. And so that's a pretty varied, you put up the chart, you can see that little cluster there of all of them buying in. And then pretty much nothing happened. We were just waiting. And then lo and behold, outside of all of our powers, the PBOC, the Central Bank of China, in coordination with the government, cut interest rates, put all the stimulus money into the economy. And now everybody's like, hey, China might rebound. Let's buy those stocks. So then the stock has taken off on this big stimulus that's going into their economy right now, and the hope that the consumer will start spending again, because Yum China owns KFC, Pizza Hut, and so it's a big consumer play over there. The numbers, the actual sales and earnings have not been terrible. They have slowed, but it hasn't been as terrible as what the stock chart seems to indicate. And I think that's also what the insiders were trying to transmit. Like, hey, we're not doing that badly, but you're all throwing out the stock, basically, throwing out the baby with the bathwater. So a lot of them got in right there. And so far, again, it's been a nice little bounce off of those lows. Now, how long this lasts, I don't know, but we're still hanging out in the stock in the insider trader. So those cluster buys, when a lot of them buy on those lows, I feel like that can send a really strong signal. But I don't know how you feel about this, but what do you think when they don't buy? Like when a stock is at 5-year lows, I'm thinking of like PayPal recently, like some of these are like Twilio. I haven't looked recently to see if the insiders, but usually when I go to look, no, nobody's buying over there. I feel like that sends a signal too that, if they're not bothering to buy, why should I?
That's a really good point. There's sometimes certain things going on. Dan Schulman was buying in PayPal right before he left as CEO, and I believe Twilio had a change in CEO as well. The founder CEO Jeff Lawson is no longer there. So I see it as a sign of maybe some internal turmoil. They're trying to work through certain things in the company, and once they feel like things have stabilized, they might buy. So that you're right. The negative signal is a signal to us as investors as well to maybe stay away for a while and buy after things have settled down. You end up losing a little bit of the opportunity as it rebounds, but I'm fine losing that opportunity. I'd rather not be stuck with dead money for a long period of time.
Yeah. Is there any industry or area you're looking at right now where you think, hey, the insiders, may start buying in this area? Kind of like after Silicon Valley Bank went under and then all those banking insiders went in, and that makes sense. But is there an area right now, like say after earnings, this upcoming earnings season, when the window might open up again, that you're like, I bet some insiders are going to go into like whatever that is? Is there an industry that you're watching?
Not at this time. I see some interest in oil and gas. Obviously, that continues because oil prices have come down, and I'm continuing to see more interest there. I want to see if some of the gold mining companies start buying with gold at these levels. I haven't seen as much insider buying in gold companies, if you will, either the junior miners or the senior miners. I have a position in Freeport McMoran, which has both copper and gold. So I like that double exposure, if you will. But I want to see if some of the junior miners start buying. And if they do, then I'll pay attention to that, especially if their production costs are quite low. Gold prices being this high could mean significant profitability for them for the next few quarters.
Yeah, I've been watching the miners too, and I'm thinking, why aren't they getting in there? It's looking pretty juicy there with those free cash flows. But they might be on the quiet period right now. And so we'll see after this next earnings season if some of them don't take this opportunity to buy in there. Yeah, and I'm always watching the energies. I already saw that some of the Matador insiders have been buying once again. They're very big believers in their company. That's the ticker MTDR. And I've owned it off and on in the insider trader for many years. We just sold out of it a couple of weeks or a week ago, 2 weeks ago, because of this oil news and with oil crashing down. But the insiders were all diving back in there. So I would not be surprised if we get back in again. And they do tend to time it pretty well. I feel a lot of these commodities insiders, they are very aware of how the commodity cycle works and what's going on in their business and what their earnings are going to look like. So they do tend to buy at good timing. So yeah, I'm looking at both of those, and then maybe some more on the tech side. But I don't think we're done seeing some insiders buying on the AI revolution side of things either. So we'll see where that goes. I've had some of the semiconductors in my portfolio over the years and or recently again, because they have been buying in some of there. But, I'll be tuning in to see are any Micron insiders buying, what's going on with them, that good earnings report. But we'll see. So any parting words for someone new to insider trading? Obviously, they should buy your book. I'm holding it up again. The Event-Driven Edge in Investing. Check this out. It's on Amazon. I was kind of he was kind enough to give me this version for myself to read, but definitely check it out. Great other chapters, as I mentioned in there. But any parting advice?
Yeah, always do your own due diligence. The insider buying or selling is one signal. A spin-off might be another signal. You might find that insiders are buying in a merger situation, which is very rare, but you might find something like that, or you might find that the company is buying back its own stock when the insiders are buying. So all of those are signals, but at the end of the day, you have to do your own due diligence, understand the company, the sector, what the future might look like. If you can predict it, very few people can. But the way that would help is it'll give you the confidence to stay the course when things don't go well. Insiders are early like value investors, so they might, things nothing might happen for a few weeks or few months. But if you've done your own work, that gives you the confidence to stay the course, either when nothing's happening or something goes wrong. I view all the six strategies as idea generation strategies, but you got to take those ideas and run with them yourself and do your own work on them.
Yeah, that's a good point. It is about ideas. And that's what I do like about watching what the insiders do, because you can get a lot of interesting ideas on companies maybe you're not even aware of or following. And then you discover something really cool is going on there. So, keep that in mind for all of you newbies out there. And there is ways to get a lot of this insider information. Even Zacks has an insider page where you can go put in the ticker and see kind of what the insiders are doing. You can go on the SEC site, but that would just be like, oh, I wonder if anyone's buying at Micron recently, and then putting it in and going in to look at Micron. Otherwise, the SEC is not going to tell you where the insiders are really buying. You have to kind of figure it out, but there's other ways, and you can get lists, as we all do, on who is buying where and when. Okay, let me give the tickers out to those who have kind of been keeping track of what we've been talking about. So we did mention High Peak. That's ticker H as in Harry, P as in Paul, K. Then you mentioned Pinterest because of what the CEO had to buy shares. It's just PINS. He mentioned Freeport just at the end there, and that's F as in Frank, CX. Some of the examples we gave: Vertex is V as in Victor, R as in Robert, T as in Tom, X, VRTX. Zillow is just Z. RH is R as in Robert, H as in Harry. Yum China is Y, U, M as in Mary, C. YUMC. And then we talked about Supermicro. It's S as in Sam, M as in Mary, C as in Charles, I. SMCI. And as always, you want to be sure to subscribe so you get all of our podcasts. This was a long one, and interesting. So you never know who's going to be on the podcast every week and what we're going to talk about. But this week it was on insiders, and next week we shall see. So be sure to subscribe. Get us on the audio versions on Apple. We're on Amazon Music. We're on Spotify, of course. We're also on SoundCloud, but pretty much just any podcast platform. We are on them all. And you can also get us on YouTube, as I mentioned earlier. Get us there for the video podcast so you can see all the charts and what we're talking about and see our faces. Get us on Zacks.com/YouTube. Just go on YouTube, put in Zacks Investment Research. You'll see it there. But be sure to get us somewhere, and I'll see you again next week with some more stocks.